More than 50,000 first home buyers are at risk of losing money after house prices tumble in some capital cities. Homeowners in Sydney and Melbourne will be hit the hardest as the government's 5% deposit scheme backfires into a borrowing nightmare.
So there's 50,000 first home buyers that are now at risk because of negative equity. And I genuinely want to understand how Anthony Albanese and his team are sleeping at night. So his government pulled the 5% deposit scheme forward from January 2026 to October 2025. And tens of thousands, 50,000 people to be exact, rushed into Melbourne and Sydney to buy assets. So here's the problem. You purchase a $1 million asset over in Sydney with a 5% deposit scheme. Your loan is now $950,000. Now Sydney prices are set to fall by 6% this year. So your loan amount is still $950,000, but the value of your property now sits at $940,000. You owe more than the value of the property. That is negative equity. And that's a problem because if house prices continue to fall, inflation continues to increase, interest rates continue to climb, and fuel prices continue to climb, and the cost of living pressures just are too much, you may need to sell your property, which means you potentially lose out on your deposit and more. Now, the part that absolutely baffles me the most, the fact that Anthony's government dropped the 5% deposit scheme last year in October, but then continued to think it was a good idea to drop the federal budget now in May. So there are 50,000 first home buyers now at further risk because investors have been put to a halt because they're no longer entertaining low yielding markets, which is predominantly where first home buyers are playing. So it begs to ask the question, who on earth is running these numbers when Anthony and his team are going through and understanding what is the best solution to get people into the market and create more houses? Because it feels like they're doing the actual opposite.